All right, then let's then start this session. We are all set. This is exciting. Today we have the pleasure to talk about the NPL market in Brazil, which is frankly one of the most vibrant, distressed market around the world these days. Um, for the second year in a row, we expect to be delivering around 12 billion of US dollars of face value, of course, and that's distributed in different asset classes. Um, the event that we are hosting today have two sections. The first section will provide a snapshot on the international and national NPL markets, and this section will be led by two of the Deloitte partners. The second session will emphasize a discussion on Brazilian distressed market, and we will have four key distinguished actors here discussing them with us, which are going to be made and naming in a bit. Finally, this event is organized by Deloitte. We have a global team of portfolio advisory. We advise both sellers and buyers. That's to say, we're here to help you. Without further ado, I would like to commence this section inviting Alok Garotra. Alok is a partner at Deloitte UK. He co-heads the Global Portfolio Advisory. Alok has more than 20 years of experience in financial services. He worked before Deloitte at Merrill Lynch. He also holds an MBA from LBS. In case Deloitte, Alok, the stage yours. Thank you for being with us. You may start.
Awesome. Thank you so much, Andre. And thank you everyone for joining and taking the time this morning. I'm hoping that this is the first in a series of similar webinars that we do. And obviously it's focused on Brazil being the largest market in the region. It would obviously be interesting to get feedback as to what you might find interesting or other subjects that you might want covered so that we can keep that in mind for future webinars. Quickly as background, so I run a global team. It's based out of the UK called the Portfolio Lead Advisory Team at Deloitte. It's focused on credit and doing non-core and non-performing loan portfolio sales. We've been doing this since post the financial crisis. So, in the late 2000s and the 2010 onwards. I think there's a couple of slides that we can put up, maybe. So I think this essentially just talks to maybe 30 seconds of promoting the firm and what we do. It's essentially working with banks on helping them identify and delever non-core and or non-performing portfolios, and then also working with private equity and the funds on the buy side and helping them buy. I think apart from the buying and selling of loan portfolios, we're also involved in looking at single names, in securitizations, in setting up capital solutions and forward flows, and a whole bunch of other things that we can help with to the extent that they're relevant. I might spend a few minutes just talking to the themes on the next slide on at least what we're starting to see more of in Europe. And I think some of this probably is global as well. So I think just given the macro environment that we're in, post-COVID, inflationary pressures and unprecedented interest rate hikes across the US, across Europe over the last 12 odd months, I think we're starting to see a lot of distress start to come through. And unlike, previous, issues, we're starting to see this across sectors. So it's not necessarily driven by one sector, though there are, cracks that we start seeing in spaces like commercial real estate, etc., driven by offices and the move where everyone's not gone back to work yet. So I think on account of the recessionary pressures, I think we're starting to see distress come through. We obviously at our end track bank results and track the migration of stage 1 to stage 2 to 3 loans. And we're starting to see a significant increase in the stage 2 loans on bank balance sheets, though I don't think it's translated into NPLs yet. But I think the forward indicators indicate that, over the next 6, 12, 24 months, a lot of this is likely to translate into NPLs. On the other side, we're starting to also see regulatory pressures. So we're starting to see the Basel 3.1 norms come into play, which will then allocate higher risk weights to certain loans and categories based on loan to values, etc. And then we're also starting to see the ECB and other regulators come down hard on banks around how loans are classified, how they're provisioned, how often things like valuations need to be done on the underlying collateral and assets. So they're a lot stricter around asset quality than they would have been post the last financial crisis. In this part of the world, we're also seeing a significant increase in non-bank financial institutions and private credit. To the credit of the banks, I think in Europe, a lot of the lending in areas that were high risk in the last 10 years have actually reduced and lending practices have been better. But this is where the non-bank institutions and the private credit funds have stepped in to fill that gap. So where commercial real estate lending would have been primarily done on the back of bank balance sheets historically, I think a lot of that risk is not necessarily sat on bank balance sheets anymore. So we will likely see distress not only percolate through the banks, but also on the fund side of things. And then the last bit is around the private equity and the investor community and the amount of dry powder that they have. So there's a significant amount of fundraising that's happened over the last 12, 24 months for what they perceive to be a significant opportunity to invest in the non-core, non-performing distress space. And the funds have been sitting on this capital for the last, for that period, in the expectation that there is a large flow of opportunity that comes. But given where risk has been, there hasn't been that much transaction flow or investment activity. But I think in speaking to funds, we're starting to see increased pressure on them to start investing some of that capital. And the hope is that the bid-ask spreads that we've seen historically come down as some of these funds start to flow into the credit markets. So I think I'll probably leave it there. I think we can take questions later on how things are developing. But it'll be, I think maybe we move on. Andre, maybe back to you or to Ricardo.
Yes, thanks very much, Alok, for those insights. You did mention something before we go ahead, that if the audience has any questions, you have a chat button at the bottom of your screen, which you can type your question. You can type it anonymously, or you can put your name over there, whichever you prefer. And we'll be analyzing those questions and consider taking them at the end of the presentation. But for now, thanks, Alok, for this international snapshot on NPLs. Now we move on to kind of focus on Brazil. We have invited also Ricardo Marin to share the insights on the Brazilian NPL market. Ricardo, as mentioned, is a partner at a local firm. He has more than 15 years of experience in the credit sector, and he specializes in collections and non-performing loans. Ricardo, thanks for being here with us. The stage is yours.
Thank you, Andre. I would like to thank you everyone for joining us today, especially our panelists. The thing here is that our specialists will share with us their thoughts and their views on the Brazilian market NPLs, which is currently facing a very huge development and bringing our wide kind of different assets and challenge that we have here. I just want to make an introduction, and as a flavor, it's important to highlight some numbers of the Brazilian market for who do not know them. So currently, our financial system amounts to $1 trillion of credits in our portfolios, and with a compounded growth rate of 80% per year in the last 10 years. So it's a very stable and major market, but we still have space to grow more. Our GDP penetration, it's only 70% when you compare the credit penetration as a percentage of GDP. And as a consequence of this currently growth of the market, the NPL disposals strategies are taking place naturally, not only for the big banks, but to fintechs, to retailers, and even Petrobras made a transaction this year, and the number that we have here, we just doubled the market since 2019, when we have $6 billion transacted in face value in 2019, and we doubled this number to $12 billion in 2022. And Deloitte estimates that we have more than $120 billion of written off credits outside the financial systems. And we have another huge segments like education, utilities, services that are not on this pool. And we expected this kind of assets will be more and more transacted in the next 2 years. And Andrea, I will make some things here. We are nowadays our transactions are more focused today on unsecured retail credits, but we still have a lot of opportunities on REOs and corporate loans. So I just want to make this introduction of Brazilian market so Andrea and the panelists can discuss in further details. Thank you, everybody.
Perfect. Thanks, Ricardo, for these insights. Let's now try to go to the, let's say, most interesting part of this webinar, which is a discussion of the distressed market in Brazil. And for that, as mentioned, we invited 4 key actors in the Brazilian sector. I'm going to be presenting to you one by one. As a fair warning, I have to shorten the CV because the trajectory is quite impressive. So let me start introducing you Guilherme Ferreira. Guilherme Ferreira is a co-founder and partner of Jive Investments. Before Jive, he works at Lehman Brothers in New York, and also several senior positions in Brazil in other companies. Guilherme holds a law degree from University of São Paulo and LLM from Columbia. Guilherme, thanks for being with us. Next to Guilherme, we have Guilherme Ferreira. Apologies, we have Alexandre B. David. He's a partner at the law firm ASBZ. Alexandre heads the banking and financing practice, as well as co-heads the insolvency practice. Alexandre is probably one of the top experts when it comes to NPLs in Brazil, and he advises both sellers and buyers, local sellers and buyers, international sellers and buyers. Alexandre, thanks for being here with us. Next, we have Carl Ainley. Carl is a senior vice president at Cerberus. It's international, one of the biggest distressed buyers in the world. And Carl is focused particularly in Brazilian real estate opportunities. He has more than 20 years of experience in this area, both in Brazil and the UK. Before Cerberus, he also had several senior positions in other companies. He's an Emirates certified and natural from New Zealand. Well, Carl, thanks for being here with us. And finally, we have executive and entrepreneur. His name is Victor Loyola. He brings more than 25 years of experience in financial services, especially in the consumer banking industry. Before he now is a managing director at Banco Neon. Before that, he has several positions at Citibank, HSBC, Barclays, and the list goes on. He's an electrical engineer, as his background education, but also holds an MBA from Thunderbird. Victor, thanks for being with us. Let's not dive into discussion, which presumably that's why you're here. I have the first question, and the first question I'd like to address to Victor. Victor, the question is about the NPL market trends in Brazil, which is what are the current trends in the Brazilian NPL market, and how have they evolved over the past few years? Moreover, can you share some insights into the volume types of NPLs that banks are actively selling in Brazil?
Good morning, everyone. Thanks for the invitation, Andre. Thanks all for the audience. Actually, I think that this market has evolved a lot during the last decades. I executed the first asset sale when I was in Brazil in 2009, at that time in Citibank. And from that time, on a recurrent basis, we have always been selling distressed assets for the market. By 2009, it was already a market relatively well developed, but not necessarily with all the big players on board doing asset sales on a recurrent basis. After a while, this became a market practice. As you can see nowadays, even big incumbent in Brazil has its own business unit that deals with that. So Itaú, Bradesco, and Santander, and even Banco do Brasil, all of them have business units that handle the purchase of distressed assets. So this really became a big business for the industry. We also have multiple other players that arose buying other types of distressed rather than the traditional unsecured loans that are being sold on the banks. So I would say that as someone highlighted, it's a market that will generate around 60 billion reais this year, same size as last year, almost growing 30% versus 21 when it was around 45 billion. So it's a big number, and it's coming also from other players rather than financial industry. So sectors like education, telecoms, small retailers are learning that this can be a good practice in terms of leveraging its results and its balance sheet. So as I'm talking to you under the perspective of a seller, so even in my current role in Neon, we are doing asset sales on a recurrent basis annually. So we are doing this 2 or 3 tranches per year, selling unsecured lending, credit cards, whichever is in our assets with more than 180 days past due. This becomes non-core for us, and we are doing it on a recurrent basis. And I see this as a common practice around the market. Of course, that there has always been the question of the best time of the year or the best momentum for one to proceed with a sale. But in the end of the day, the benefits of getting focused on your core business, not getting distracted by assets that are no longer generating revenues and where you're not specialized. So all of this, and you clean your balance sheet. So all of these elements are very visible for the players on the sales side. I would say that probably all relevant players in the market will proceed with asset sales in the budget exercise for 2024. So we'll do it again next year in our case in Neon. And I see other players also doing. This is a market that became matured. And I would say out of the financial industry, it's also happening. I see a lot of movement, and I know a lot of small players acquiring assets for small retailers here and there, education sector, telecom sector. So you see a lot of movements all around. So versus the situation where we were maybe 10, 15 years ago, the market really achieved maturity, I would say. So with important players all around, with expertise spread out. So you have examples here in the panel. And I see, of course, that this is related to the amount of assets you generate. So at some point, it has a correlation with the movement of the credit industry. So it comes with a delay. And the credit industry has not grown so aggressively in the recent years because of the pandemic and other elements. But I would say that with a potential, let's say, stabilization of the macroeconomic environment, I would say that I would project that 24 we would have more transactions than in 23, because people are getting more aware. The market tends to be more favorable for this type of business, and I would anticipate that we would get more than 60 billion in 2024. Most of the assets are related to unsecured loans, auto loans, etc. But there are also other types of papers being transacted, and I would say that my colleagues here can talk much better than myself on the topic, since I am dealing mostly with the unsecured lending products. But I see that it's a market that got matured very fast. From the moment I executed the first asset sales in Citibank in 2009, actually Ricardo Marinho was there at that time doing this job. From that moment to now, certainly the industry has progressed fantastically. So it's a kind of it came from a incipient to a mature business right now.
Well, quite an introduction. Thanks for that, Victor. If I may isolate, one of the things that you mentioned is that almost all institutions have already acquired this taste for delivery and selling its assets to manage their risk exposure. I think it's quite good, because the convincing process for institutions has already started, has already taken place. So that's quite good news for the industry. I'd like now to ask a second question, which I'm going to be addressing first to Carl Ainley, then to Alexandre B. David. The question is regarding the market entry challenges. And the question is, for international investors looking to enter the Brazilian NPL market, what are the key challenges they should be prepared for? And are there specific market entry considerations for investors who are new to this? If we may start with Carl.
Yeah, good morning, Andre. Firstly, I'd just like to put a couple of caveats around my response. The first one is, when we talk about market challenges, it's an inherently negative subject. So I want to caveat it by just saying that over the last 4 to 5 years, what we have seen in the market is a real improvement in terms of the professionalism of the market, the level of processes being run, and obviously the increase in market interest, and as Victor mentioned, specifically an increase across the consumer NPL sector. So that's sort of the first caveat I'd like to put in it. There is obviously still room for improvement, and still room for growth, and still a number of challenges, which I'll go into in a second. And the second caveat is Cerberus's focus to date in Brazil has been more in sort of mid and high ticket single NPLs, single name NPLs, and small corporate portfolios. We've tended to steer away from consumer and non-secured. And that's basically for 2 reasons. One was ticket size, which is starting to improve as we're seeing bigger portfolios coming into the market. And secondly, the scale issues needed to manage what are fairly large and diverse portfolios. So with those 2 caveats, I'll sort of move on. I think the challenges that we see as an international investor in the market come across 4 broad categories. First is the processes, secondary, timing, thirdly, public sector, and fourth, the legal framework that is specific to Brazil. So in terms of the processes, there's a number of challenges that global investors will find coming into the local market. First and foremost of which is probably the quality and the form of information that's presented in the bidding processes. We've tended to find that the depth of information provided hasn't been up to the standards that we see in a number of other markets, which obviously makes analysis a lot harder. And the format in which that information is presented is often, again, not at the sort of standards that we would see, or in the sort of formats that we'd see in other markets, which makes it a lot more time consuming to undertake the initial analysis on the portfolios and the opportunities that are being presented. The second thing around processes is they're often difficult to actually qualify to participate in. And this is something, again, that really has improved over the last 4 to 5 years, but we still see it coming out, particularly in a lot of the public sector processes that are run, where they ask for the company that's registering to receive the information to be the final purchasing entity, and they ask for a track record for that purchasing entity in Brazil. As a foreign investor, we have a habit of using different vehicles for different projects and different acquisitions, and often those vehicles may be newly constituted vehicles that won't be constituted at the time we start to do the analysis. We'll put them in place for the acquisition, or there'll be vehicles that might not have an extensive track record in Brazil, despite the fact that globally as a manager, Cerberus obviously has a great depth and breadth of experience in this asset class across a number of regions. In terms of timing, it kind of flows on from the processes. So we often face issues in terms of the timing that's given to register and receive the information being quite tight, given the number of hurdles that we have to cross to register as a foreign purchaser, and then the timing that's required for the due diligence. We take a very detailed approach to our due diligence, which I'll go into in one of the later questions, but often the time frame is very tight, particularly if you need to source or to contract local parties and local partners to undertake and help in that due diligence, whether that be players obviously such as yourself, Andre, or legal teams to really dig into some of those claims. So the timeframes historically have been fairly tight. A couple of more recent processes, we've seen that start to improve. I think that reflects the increased involvement of professional advisors on the sell side in the process. So that is something that has grown substantially over the last few years. So it is moving in the right direction. We'd still like to see a little bit more time and a little bit more flexibility in those processes. The public sector in Brazil is unique. Certainly from my point of view, it has a number of inherent challenges that we don't necessarily see in other markets. And that leads to processes which are often quite difficult for us to accept as an international purchaser. And I say the public sector is different. There's two broad issues here that I'll throw onto the table. One of which is that there's no clearly defined process for the sale of assets. And this isn't just an NPL, this goes across different asset classes. So each individual entity in the public sector will often publish a process which has been designed specifically for that entity or for that particular asset. Or they'll do a copy and paste from something that's for a completely different asset class, and it doesn't necessarily work for us as investors in this particular asset class. Again, we are seeing improvements in this. The involvement of professional advisors has seen this move, but it is still an issue in the public sector. Whereas in certain other markets, we see fairly clearly defined and robust public sale processes through formats that are well established and have a long history of trading. And what that does is it provides a defense to the seller around the pricing of the assets, it leads me to the other point I want to bring in terms of public sector here in Brazil. The individuals in the public sector have a very real concern about being held personally liable for the pricing of asset sales in the sector, even through public auction processes. And that's because the regulatory bodies can drill down through those processes to the individuals that are responsible for the decisions. And there are a number of valid reasons for the government bodies and regulatory agents to be able to drill down to that level. But I think not having a clear, defined, and established public sales process provides an heightened degree of risk for individuals, which obviously makes them reluctant to be involved in some of the sales process and makes it difficult for us to compete as investors. I think that probably applies to local investors as well as global investors. And the last point I want to throw on the table is the legal framework. And this isn't necessarily just specific to Brazil, we do see it in other markets, but the legal interpretations and the legal routes for enforcement and the way that claims can be best handled changes by region in Brazil. And that's because we have obviously different judiciaries in different regions. And it's even though it's a growing asset class, it's still a relatively young asset class. So there's not exactly a lot of very clear jurisprudence.
Yes, Carl. I was going to thanks a lot, because we have Alexander here as well, because he's an attorney and a lawyer, and I think he's gonna help out on and I like the answer that you gave because you are foreign investor from a foreign fund here locally, so I can see the initial struggle that you had. But if I'm getting this correct, you kind of see the glass half full because there's a lot to do, but a lot has already been done.
Exactly. And I did give the caveat that it is an inherently negative subject to talk about. And I think the discussion on that legal framework was definitely my opening to pass over to Alexandre, because it's more his area of expertise.
Yeah, we might pass over to Alexandre. Thanks very much, Carlos.
Thank you, Calso. And first of all, thank you, Andre, Alok, and the Deloitte for the invitation. A special thanks to my good friend, Ricardo Marin, one of the great professionals in the NPL market in Brazil, and with whom I have been working for many, many years. Finally, thank you to the panelists, Carl, Guilherme, Vitor. So I'm going to cover this part on the let's say, very different regions of Brazil, and a further topic when we speak about the diligence process. In this specific answer, I'm going to focus more on the challenges to enter Brazil, especially considering tax implications and typically considering the tax advantages provided in the Brazilian legislation. International investors interested in purchasing NPL tend to invest through what we call credit receivables investment funds, FDICs, fundos de investimento em direitos creditórios, which is a vehicle regulated by the Brazilian SEC, CVM, Comissão de Valores Imobiliários. The main advantages for investments through FDIC are, first, the FDIC is a tax-neutral environment. Therefore, it will not be divided by withholding income tax over tax gains until the withdrawal of funds by the investors. And second, there's a reduction of withholding income tax over tax gains in rates varying from 22.5% to 15% as per regressive taxation table, depending on the length of the investments in Brazil. So basically, the tax rate reduces of 2.5% every 6 months of investment, reaching the lower tax rate of 15% after 2 years. Although the FDICs are the most common investment vehicle for investors in the NPL market, it is yet very challenging from a KYC perspective, the selection of FDIC service providers, asset managers, custodians, because the major banks such as Itaú, Bradesco, Santander, Banco do Brasil are not always available to provide this sort of services, and local houses, which are much more active on this market, are not always approved for KYC purposes of international investors. Of course, investors may also acquire NPL directly, assuming it is permitted by law and in the sales process, as Carl mentioned. Sometimes there is sometimes this is a challenge because they require a previous history on or previous transactions done in Brazil, or having an entity as a local entity, and sometimes, unfortunately, foreign investors cannot do it directly through their international vehicles. And in this case, the taxation will vary according to the nature of the acquired NPL. And finally, an investor may also invest into a Brazilian company, such as a securitization company, which will then acquire the NPL's portfolios. And Brazilian companies are generally taxed at a 34% income tax over tax gains plus 4.65% of federal VAT. So comparison between investing through a Brazilian entity and the FDIC is huge. We are talking about 40% in an aggregate tax rate over tax gains for a Brazilian entity to 15% on the withdrawal of investment. So from a tax perspective, and I promise that I will cover the different, the other good aspects that Carl mentioned in his answer on the following topics on the due diligence. This is the main frame of taxation in Brazil for this kind of investments.
First of all, thank you, Carl and Alexandre, both for your answer. We kind of have now sort of a curveball, putting that with a disclaimer that I would like to address first to Guilherme Ferreira, then also back to Carl Ainley. And the question is regarding price and pricing valuation. The question is, what methodologies and factors investors consider when pricing NPL portfolios? Let's say from different asset classes. You might want to focus on retail, secure, single names, legal claims, etc. And secondly, how do you assess the risk associated with the NPL transaction? What strategy do you use to mitigate those risks? We may start with Guilherme.
Sure. Thank you again. Thanks for the invitation, Andre and the Deloitte team. It's great to be here to discuss with such great colleagues in the field. So essentially, when you're trying to price any asset, obviously you're looking to the cash flows, and the challenge here is to figure out what the cash flows of an NPL portfolio are going to be over time. When we're talking about consumer NPLs, which is not something that we focus on, it tends to be represented by a curve that reflects the aging and the nature of the various loans comprising the portfolio. Usually that curve tapers off over time, and there's a cliff when the loans start to get around 5 years, which is the aging where you're required to take the names of the borrowers out of the credit protection systems, and the incentive for them to pay becomes much smaller. There's actually a new decision by the São Paulo State Court of Justice saying that you can no longer try to collect, even if it's out of court, because it's the statute of limitations has elapsed, and therefore the debt is no longer collectible. But separate conversation, the folks, Victor and the other folks in the consumer NPL world might have something more up to date to say about that. But when we're talking about corporate loans, usually it really requires us to look at each loan individually, try to understand that particular loan's characteristics from an enforcement perspective. Was it correctly created? All the signatures are there. Has the collateral, have the liens been correctly created? Do you still have any collateral? What's the borrower's current situation? And in order to do that, you have to really be able to enrich the data that was provided by the seller. So whether it's a single name and you're trying to get more information, or if it's a data tape with a handful of loans, we use a combination of automated enrichment using the borrower's tax ID and name to go out and gather information from around 400 different sources through a network of bots, essentially, that scrape the internet and bring back that information to us, so that we have a better understanding of that borrower situation, with some pre-deal due diligence, which tries to bring to the surface information about that borrower that is relevant for us to understand their willingness and their ability to pay. Once you have that, you have to translate that into a cash flow, and we're going to use the legal proceeding, the expectation of time in the legal proceeding, which has different moments where you can create more incentives and more pressure for the borrower to come to the table and negotiate a settlement. And throughout the portfolio, those different moments are going to be moments when there's an expectation of cash flow. And that's going to be the inflows. You have the outflows for all the expenses and the costs that need to be allocated to that particular portfolio, whether it's internal servicing costs, lawyers, taxes, you name it. And here you have a net cash flow over time that you can discount back the present value using whatever rate of return you're looking to get in that particular project. So in a nutshell, that's how we would do it. And then as much as we can, we are willing to trade upside risk for downside protection. So we're looking to give our investors, over the life of our vehicles, which are usually 6-year vehicles, 20% plus net of everything. So in order to do that, it's, in our view, more efficient to underwrite deals at 25, 30% at the asset level, but with minimal risk of loss of capital, than to try to underwrite deals at 45, 50%, hoping that you're going to get to hit out of the park, but with significant loss of principal risk. So often what we'll do is in negotiating with the banks, we'll agree that beyond a certain return, we're going to share the upside with them, or we'll agree to hold the asset sort of on a fiduciary basis until we reach a certain level of return, and then they have a call option on the asset. There's a little bit of a restriction from the central bank regulations on how much you can do transactions that are not final with the banks, because sales of NPLs need to be final, otherwise they can't either use them for purposes of removing the asset from their balance sheets and therefore getting the relief on regulatory capital and on total assets that the transaction usually gives them, but also from a tax perspective, there's a higher risk in deducting the loss from the sale if the transaction is not final and definitive. So we're a little constrained on how much we can allow for calls and putbacks and upside sharing, but to the extent we're able to, and commercially we believe that there is more adherence on transactions that go this way. We usually offer our bank counterparts opportunities to pay a little less, but provide them with a higher percentage of the return. And there is there are a few reasons why the bank would be willing to do that. So sometimes they're selling an asset because of a relationship problem. Case in point was Vale and BHP Billiton both had relationships with the banks in Brazil. And when Samarco had the problem and the banks wanted to sell, they couldn't enforce against Samarco the way they would like to, because they would have problems with their corporate relationships with Vale and BHP Billiton. There's regulatory arbitrage. We can do certain things as funds that work better for us than it would work for the bank. So get paid in real estate, or refinancing the debt. We don't have to take regulatory capital charges there, or providing new money for the borrower, which again attracts high regulatory costs, or taking equity in lieu of payment. So those are all things that we can do. We can generate value and we can share that value with the bank afterwards through those upside sharing mechanisms. There's obviously a tax arbitrage for the bank. So for them, the sale creates a deductible write-off, which saves them a lot of money. Banks in Brazil are taxed at 49% of the margin. So for the people who don't have that figure, a 10% price means that you also get a 45% deduction on your loss. And also, as I said, we can try to do servicing arrangements where we're trying to generate value. We'll take a percentage of the value generated, but we'll return the asset for the bank if they want. So those are just some of the ideas we try to use in mitigating the pricing risk and, in our view, creating an asset that has higher certainty of expected returns as opposed to a broader dispersion of possibilities.
Quite interesting, Guilherme. Many, let's say, creative ways of trying to extract value and mitigate downside risks. Presume that's because, first, on your experience in Brazil. Secondly, the nature of developing country where you have different cycles, and sometimes you have to protect yourself. It's better to protect capital than go for the home run, as you in other words mentioned, sort of.
It's probably good karma as well. If you make too much money, the next time you come back to the bank, they're not going to deal with you. So we'd rather make a good return for the type of risk that we're taking, and have strong relationships with the banks, which are just a few, right? We only have 5 big banks in Brazil that take over 80% of the credit market. So it's good to be in their good side.
Okay, Carl, we may have your takeaway on this as well. Would you agree, disagree? Maybe how would you frame it differently?
I was going to say, what I was going to talk about has been drastically reduced by Guilherme. So thanks for that, Guilherme. I think he hit the nail on the head on a number of points. And there's probably no surprises to people who are familiar with the NPL markets in other regions of the way that we approach our valuation, our pricing on NPLs here in Brazil. Similar to Guilherme, we take a top of book approach. We go for detailed analysis on every loan within a portfolio, on the individual loans. We'll drill it right down to appraisals on the underlying assets or collateral. We will take detailed legal advice right across all the documentation. They're the fundamentals, I think, for any NPL market. You need to make sure that your collateral is secure, that the loan can't be invalidated or won't be invalidated. you need to make sure the underlying assets are able to be seized or traded, and that they have liquidity. So there's no major surprises in terms of the way that we approach it, and obviously it comes back to our view on what the cash flow from that loan will be. So I think the way we approach our valuation is very similar. We have a couple of peculiarities, being a foreign investor, and one of the risks that as a foreign investor we're very conscious of is the FX risk, cost of hedging. We invest in US dollars. We're US based, so we invest in US dollars, and we measure all our returns in USD. So we take a conservative approach. We don't like to unnecessarily risk the money of our investors, so we hedge all of our investments in Brazil. The hedging market for Brazil is, again, improving. It has its costs, so it's not a cheap option. But I think with the volatility of the currency, anyone who's been exposed to the Brazilian market for longer than 6 months understands that it's worth your while to hedge. So that's one of the peculiar risks. And I think the other ones we talked a little bit about the challenges, which is sort of the political and the legal frameworks that we have to invest in and the way they change on a geographic region. And really the only way to mitigate that risk is to go deep onto every loan, to go deep with detailed legal analysis, and legal analysis is specific to each of those regions. So I think those are probably the big points, and I don't want to have to sit here repeating what Guilherme's already talked about. I'm sure everybody got the gist of it, so I'm happy to pass on to the next question if you want to do.
Yes, thanks also, Carl, for this input. I recognize that this webinar is a bit heavily biased toward the buy side. So I'm actually glad that Victor can speak from the sell side here. So the next question goes to him directly. We did touch already a couple of things. Guilherme was mentioning different ways of structuring transactions with banks, but I would like to hear from Victor the question regarding NPL transaction structuring from a seller perspective. If I know you cannot speak for the entire industry, but with your background, I'm pretty sure you know everybody already, so you can answer this question with fundamentals. If banks are open to innovative or complex NPL transaction structure, such as, let's say, securitization to manage the risk exposure. And secondly, what are the mechanisms that today banks consider divested in non-core exposure? Are they open to other solutions as well, such as profit sharing or maybe captive servicing, etc.?
I think the answer is yes. It would be a matter of P&L, bottom line. Recently, when we were doing one of our transactions, basically focus on payroll loans. One of the potential buyers suggested that he could eventually draft a proposal that was a bit different, with profit sharing, with triggers in terms of performance, something like that. In the end of the day, this company couldn't move forward into the bid process because of other reasons. But this was something that we would be willing to consider. But again, it would depend on the comparison versus the other simpler alternatives, right? So if someone comes in and say, okay, I'll buy everything by X, and it's straightforward, more direct, versus another innovative proposal that would require also the understanding of other stakeholders in the company, right? Because I would have to talk to legal, I would have to talk to compliance with different parties inside the organization to explain what should be this new approach. So the direct answer to you is yes, we would be willing to considering alternatives in terms of offering. It requires that these alternatives would be, let's say, really more interesting than the straightforward sale itself. because it would be costly to, it would have to involve other stakeholders internally. And since it's something new, you also have to surpass the barriers for having something new in place. So that would have to bring more benefits, and I would say P&L benefits definitely should be better. I would say we should have some type of incentive, even if it's longer term. I would say, look, this type of transaction will bring us more benefits in the longer term. So that sounds interesting. I would say that the counter side of that is that normally, and from the seller perspective, normally when you proceed with an asset sale, you need that money in the short term to fill the gaps you have. That's the reality. Let's be pragmatic. So it's also good it's good from a strategic point of view. It's good for the seller to proceed with the asset sale, because it's a non-core product. It causes a distraction in your operation. You're no longer focused on that. There are all these strategic elements, but there is also the P&L element. Generally, you need that money. You need that money to fill the gaps in your budget because you're running a bit below what you are targeting for. So you're missing X millions, and that transaction would be important to fill that gap. It happens. It happens all the time. So when you talk about this innovative approach, sometimes they bring benefits in the longer term, and the seller needs something in the short term because it needs that transaction to fill the gaps, etc., etc., etc. So I would say that this could be a more higher difficulty than the content of the innovation itself. In the end of the day, what the stakeholders would ask from someone who is selling the assets, okay, how much was the check, and if this check was enough to fill the gap. You know what I mean? So that's the reality. So if the propose is capable of supplying that, that I would say that people are willing to experiment new alternatives. But the reality of life is that generally when we do those transactions, we are counting on the extra money, or maybe it was already budgeted. And if this is not budgeted, it is being done to fill some gap that was created within the year, and we need that extra cash to resolve the situation. That's probably the biggest driver of a asset sale. So there is a lot of concern with the short term, right? So I would say whichever different alternative comes into the table, it should be taking this into consideration.
I think that's a very good and honest answer, regardless of the aim of this webinar, right? But in a way, it's good. Let's open air quotes there, because it provides opportunities for buyers not only to purchase in a organized sales process, which we're going to be mentioning this later on, but also to find these one-off opportunities. Well, I wouldn't say one-off, but these opportunities, if the seller is willing needs to do a deal, in the short term, and if the price is fair, they want to close the deal. So I think that's good that you have both alternatives, or something more long-term, structured, with profit sharing, or with the other structure that Guilherme mentioned in his answer before. But also sometimes you need a couple of millions to feel to reach a target. And selling something that's not core, that's just messing up your balance sheet, or it's that extra fat that you need to put away. Then you put a quick deal and everybody wins.
But I would say that if the buyer understands the position of the seller, it will tell the buyer if the approach is more or less convenient, depending on what's the situation at that point? Is there a focus on the short term, or is there, this is a strategic approach, it's longer term? So whenever the short term is not so important, there will be more space for different alternatives, I would say.
Okay, perfect. Well, thanks, Victor. Thanks very much. Let's maybe go back to a question related to the legal due diligence, especially that's such an important issue when you want to enter a new country. Alexandre, this is for you. Is regarding the legal due diligence as mentioned. What are the critical aspects of legal due diligence in an NPL acquisition in Brazil?
So, Andre, Brazil is a civil law country and adopts a similar procedure as to the English rule, which means that the party that loses in court pays the other part legal costs, as defined by court, which is what we call sucumbência. And this sucumbência varies from 10 to 20% of the claim. So, considering this, the scope of the due diligence for NPL acquisition shall not only cover the chances of recovery of the purchased NPL portfolio, but also the risk of counterclaim should the creditor lose any of its claims against the debtor in court. So a part of the common due diligence procedure focused in the validity of the loan documents and collaterals. We have listed 4 main aspects of a legal due diligence in NPL acquisitions in Brazil, which we think are relevant. So first of all, and then making reference to Cole's last remark on the decentralization of the judiciary system. So Brazil is a very large country and adopt a decentralized judiciary system. It has more than 2,500 state courts spread over 27 states. And although it is possible to find the specialized state courts in the main cities, particularly in the capital of each state, the regional state courts, which generally combine several different matters, so commercial, criminal, tax, and other specialties, have a very significant part on the Brazilian judiciary system. And the lack of specialization of some regional state courts is something that could difficult the speed of the credit recovery claims, therefore impacting on the NPL portfolio pricings. And although the state courts are decentralized, the vast majority of them are now integrated by electronic system of each of the 27 states. And so the migration of this physical to electronic process has materially simplified the due diligence process, permitting investors to be able to run a deeper analysis in the NPL portfolio, therefore enabling a more accurate view on potential recovery. Finally, Brazilian judiciary system respects clause that regulates exclusive jurisdictions. So the competence of each court for the judgment of matters is well defined, as well as the contractual clause choosing by the contracting party to define in which location the process will be judged. In Brazil, there is an express contractual relationship. The parties can agree on the place where the case will be judged. Therefore, many of the banks chooses the main capitals, the main cities of Brazil. Brazil has a stable legal system. The Civil Code was enacted in 2002, therefore enforced for more than 20 years, and has been evolving in the last years to create a more friendly environment for business. The Brazilian bankruptcy law is also enforced since 2005, although being punctually modified over the last year, and has been pretty tested. Also, more recently, I'm talking about 1 month ago, a new regulation sophisticating the credit collateral system, Marco Legal das Garantias, was enacted, and with the purpose of giving more certainty to investor on the constitution of its collateral, as well as expediting the foreclosure process in credit default. So it was very common to see hipotecas securing large credits, especially those from public banks, Banco do Brasil, for instance. And these marco legal of garantias now provided for an extrajudicial foreclosure process for hipotecas, which is a very interesting thing. The statute of limitation is also a very important topic, and Brazil established the statute of limitation. The general rule is for 10 years. But there are several specific rulings regarding statute of limitations for each specific type of claim. So civil reparation, indemnification, for instance, is for 3 years. Collection of liquid debt under private or public documents are for 5 years. One of the very interesting and concerning topics of international investors when entering into an NPL portfolio purchase is that Brazil also provides for a statute of limitation during the course of the legal claim. Should the claim for inertia of the claimant stay suspended for a determined period of time. So this is the well-known prescrição intercorrente. This type of statute of limitation is very commonly seen in NPL's portfolios at sales, since the original creditor is generally not focused on recovering its credit due to investment it will dedicate in order to succeed in a claim of such nature. Reason why it basically decides to sell its portfolio to a third party. So assuming that in Brazil, the party that loses in court pays for the other part legal costs, the verification of statute of limitation, either in the beginning of a potential claim or in the course of an existing one, is a very material aspect to be covered by the dealings. Finally, legal fees. Generally in Brazil, legal fees are fixed in 2 stages, what we call the prolabore, which is an amount paid by clients to the lawyer to monitor the process and carry out the procedural acts. And the second part, which is a success fee, an amount paid to the clients by the clients to the lawyers in case of success in the process. In addition to the contractual fees, Brazil adopts similar rule as the English rules, as I mentioned, and the judgment of a civil case impose a payment of attorney fees to the prevailing party. This is the succumbência that I mentioned before, which varies and will be determined by court and varying between 10 to 20% of the amount in dispute. What we've seen over the years is that it is uncommon for parties to provide for treatment of a success fee and succumbência in case of an NPL portfolio sale. Due to this fact, it's always important to know the value of legal fees contracted by the original creditor and the treatment of such legal fees in the sale process, considering it as part of the pricing mechanism of an NPL portfolio sale.
That was quite comprehensive, Alexandre, and not an easy question to answer, but appreciate your structuring in different points, so it was easier to comprehend from a foreign perspective, quite clear. I have to be honest to my fellow panelists here and people that assisted to this webinar. We are running out of time, so I'm just going to cut 2 questions that I was going to ask, and I'm going to focus only in 2 more. I would like to ask for your answer to be brief. Please try to mention all the important aspects, but maybe we can go a bit faster. So we still have time. I think we have 3 questions here. They're quite interesting. A question regarding portfolio management. apologies to the audience, but for the panelists, this is question number 8. Is a question that I would like to address to Guilherme Ferreira first, and then to Carl secondly. The question is, can you share some insights into the best practice for managing NPL portfolios in Brazil, including servicing and collections? Secondly, how do you prioritize and optimize the performance of the acquired NPLs? Again, let me remind, if I kindly ask you to be brief in your response, although a very important question, but let's keep an eye on the watch. Thank you.
Sure. So obviously, when you buy NPLs, you need to think in advance how you're going to service them. And in Brazil, at least to my knowledge, there is not a lot of available third-party servicing. So the largest investors tend to have their own servicing platforms. It's the case here. It's the case with the various banks that have created their servicing subsidiaries. And usually it's the case for our competitors in the corporate NPL market as well. There are a few notable exceptions, but they are exceptions. Can you guys still hear me? Because it's frozen for me here. Okay, all right. I think it's just Andre. So really what we're trying to do is transform the underwriting plan into reality. The information that we gather during the analysis and due diligence is a roadmap. It usually includes a survey of the potential assets and indicia of assets that particular borrower has. If it's a situation where there is still an operating company as opposed to just a company in liquidation, there is also a process of trying to understand whether that company can be helped in terms of providing new capital, providing M&A opportunities, helping them sell assets to deleverage and so on. And if not, it's going to be really a liquidation process where we're trying to maximize our recovery through the legal proceeding and or buying other claims against that same borrower to improve our position or to remove obstacles, for example, to taking a property when there's another lien between our positions and so on. In terms of prioritizing, it's really sort of an ABC curve, but it's very, very dynamic. We're constantly reviewing the portfolio to try to understand where we can get short-term value and long-term value. You have the short-term wins, which are important to keep the performance of the portfolio within the underwritten parameters, but you also need to be working on assets that are not yet mature, so that the value that's generated through that work will mature towards the end of the portfolio cycle and generate the returns that you're looking, as a whole to produce for that particular asset. Obviously, size is an important consideration, so larger assets tend to get more attention. The level, the expectation of return that we have on a particular asset is a consideration. If it's an asset that's sitting on a fund that's closer to its end, it will also sometimes be prioritized so that we can meet the fund's terms. But generally speaking, the view is always how can we create maximum value, including short-term wins and long-term value generation through the location and seizing of assets, if it's a liquidation scenario, and through the negotiation and value creation, value addition through interaction with the borrower, if it's a situation where the company is still operating and has an opportunity to pull itself out of the financial crisis that made it default on the loans in the first place.
Thanks very much, Guilherme. Carl, you may share your views on that.
Yeah, absolutely. I agree with Guilherme that there's not a raft of third-party services currently operating in Brazil. That is one of the reasons that we tend not to focus on the bulk consumer portfolio, as I mentioned earlier. At the moment, to do so, you need to scale your own operation. We do look at opportunities to co-invest. So we will look at investing usually with the majority stake, but we'll look to co-invest with local operators on some of the portfolios. But we tend to focus more on the single names in the mid and upper sector, upper market, and bigger tickets, or smaller manager portfolios that we can manage in-house with our local team. Obviously, with sort of decades of insight and experience operating across multiple regions and having entered into other new regions Cerberus likes, we believe that we can bring our best-in-class practices to Brazil, whether that be in dealing with the portfolios directly and managing the NPLs ourselves, or working with local partners to bring across the experience and the expertise that we've got in-house and with partners in other operating regions. A bit of the famous case they say here in Brazil, we like to bring our global experience and tropicalize it for the local environment. I sort of reiterate what Guilherme said. When we acquire portfolios, because we're acquiring smaller portfolios, we tend not to have to separate out the NPLs into low, middle, and high priorities. We purchase our portfolios and our loans knowing that we have an ability to give the necessary focus and the necessary timeframes. So I think that's kind of how we approach our management here. And unfortunately, we don't have large portfolios in Brazil with our investment from Cerberus Investment. It's not something that we look at the moment.
Yet.
Yes, exactly. Yes. The great caveat, yes. It's a growing market and we intend to keep expanding. That's why we're here. That's why we've got our offices. And we like the market. And as I mentioned earlier, it is improving. Every year we see the market becoming more and more professional and more opportunities becoming available. So it's certainly an interesting market to be involved in.
Yes, I think it's quite a statement that Cerberus, and particularly I work with you guys a lot in Europe, familiar with the size of the fund and the investment strategies, focus also in Brazil. It's quite positive that a fund like yours is on the ground here. I had 3 more questions. I want to be respectful for your time, the panelist specialists, especially. Would like to ask then just one final question regarding exit strategies. So it behooves at the end of the presentation ask someone about the exit strategy, right? I would like to address that to Guilherme directly. Guilherme, what are the typical exit strategies for NPL investors in Brazil, and how do you plan for them at the time of acquisition? Just mention something after Guilherme answers. We're gonna have 3 Q&As from the audience, and then we are gonna wrap this up. But Guilherme, please go ahead.
I'll try to be brief so we have time for the questions from the audience. But generally, when we underwrite, we have the preferred option for exit for each particular loan or for the portfolio as a whole. Some assets are self-liquidating, so if you have a loan that's reperformed or that you can get a payment plan, it's going to be paid before the life of the fund, then it's less of a concern. It should become cash by the time the fund ends. But some situations when you get REOs or when you get loans that have that are in a liquidation scenario, or when you renegotiate and the term of the new loan is longer than the term of the fund, then we need to think about sales. And so, if you think about the life cycle of the investment, first you need good origination, which is long-term relationships with the banks. You need good information gathering and analysis in order to understand whether that transaction makes sense for you. Then you need funding, which is a challenge often in Brazil. Most transactions are done 100% with equity because we don't have a very active funding market for NPL transactions. So most of the large transactions are done by funds or by banks that have other funding sources. Then you have servicing and execution, which we talked about. And finally, you have distribution, which is being able to sell some of the things that you generate in your servicing process back to the market. And the idea is that once you de-risk that loan, once it has become a reperformed loan, it has a track record, sometimes you have added collateral that was found during the search process as a guarantee for that particular settlement or reperformed loan. There will be a market for it in the high yield market or in the sort of special situations market that will take it from you, as opposed to being a non-performing loan. And the same thing goes for real estate. Once the REO comes in, we'll try to clean it up, make it desirable and easy to understand for typical, whether it's a developer, somebody that's going to build a warehouse, or if it's an apartment, whatever, it's going to be the final user. We'll sell it to them clean, free and clear, so that they can pay market price, as opposed to having to deal with the headache of having lawsuits, having tenants that are not paying, and so on and so forth. So that's asset by asset the idea. We'll find something, we'll have a plan during the underwriting, and ideally that's going to be what happens. If it's not what happens, we'll change and adapt that plan. And as we get towards the end of the fund, then we need to talk about larger sales, including sort of, our own portfolio sales and commercial for our friends here at Deloitte. We've used Deloitte to help us in those transactions. So to go out to the market, talk to the other players, which often are people like we are, but often are other types of investors that have a different view and that are looking at different segments of the market that are not always within our radar, so that we can do something that's both transparent in terms of having a credible intermediary that will be able to provide the information, organize the Q&A, and sort of vouch that the process is for real. It's not just taking price from the market in order to mark the fund. And ideally, we'll be able to conclude that sale and wrap up the fund when the time comes. So you have the asset by asset strategy, and then you have sort of the bulk remaining of the fund strategy that kicks in towards the end of the fund's life.
Right, perfect. Thanks, Guilherme, and apologies for throwing the mic at your desk all the time, but I think it was quite a good answer. Guys, we are.
And just for the record, we did not agree in advance that I would make this small commercial for Deloitte. It was for real as a satisfied client.
Yes. We have 3 questions here from the audience. The first one I'm going to take is a rather straightforward one, and I think Deloitte would be in the best position to answer. But Marin, feel free to interject here if you have a different view. But the first question is whether if the majority of the sales are done through a competitive sale process, organized sale process, or they are more on a bilateral basis. The slight majority of the sales go through a competitive process, and runs, I would say most of them, without being too modest. But we also have many platforms here that for smaller transactions, more plain vanilla stuff is also being sold on that. Naturally, for the single names, specific transactions with time positive, Guilherme call also deal with that on a daily basis, and Alexandre, of course. Then you have more bilateral opportunities when it's a more, I wouldn't say complicated transaction, but it involves more a deep diving with a line-by-line basis rather than something statistical. The second question, then I would just let it either one of the panelists, ask for the mic and answer. Otherwise, that's one particular that I would like to hear Victor's opinion, which is how technology is transforming this business. Are there any disruptors challenging incumbents? Maybe Victor or someone else can take that one.
If there are any disruptors, look.
Yeah, and technology, how technology is transforming the business, and are there any disruptors? I'm asking you because you yourself disrupt the market with the fintech that was later acquired by Banco Leon. So maybe you're the right guy to answer that. Not to put any pressure.
No, because I look, the NPL is the NPL market. I would say on the consumer side, what makes a difference here is the amount of information you're capable of infer from what you're purchasing. So this is a statistical business. So in the end of the day, the one who is buying, of course, buys for X and wants a profit on it, and he needs to understand what he's buying in terms of probability of payment, the profile of the base, where he get additional information, historical behavior of the asset. So it's something. This knowledge is very well spread out these days. So I would say I don't see a lot of disruption coming in, unless for the fact that how better you assess information that is not known by the players at this moment. So I mean, what extra information you're capable of absorb to the paper you're buying that can create a differentiated factor in a way that you that are buying, you know, your surely will get a good return on your investment. So how much more information can you get? So this is a matter of information that adds value to that paper. So I don't see, rather than that, I don't see a lot of techniques coming in that would disrupt the market. It's a very well known, very well established. So it comes from the credit originated from the creditor, right? So he originated the credit, someone originated the credit, someone knew the information about it, someone make all the assessment. For any reason, it didn't go right. It became delinquent, distressed, etc. And again, someone who is acquired will assess all the information that the credit already have. Probably it's going to be there available, and there should be extra information that makes that deal attractive for the buyer. I would say information here is the key for a good process. I would say disruption would come, if comes, around the capability of getting extra information. That's it. I don't see other, or rather than that, I don't see any other factor. But I might be blind. Again, I might not be the guy who is there purchasing I'm selling, I'm not purchasing. So eventually I'm missing some point here. But that's my point of view.
I think was a quite good answer, and I may add, and whoever wants to add, of course, as Deloitte, we do sell side and buy side, and when we help investors as well, there's also the fact of how much information you have. In Brazil, you have several institutions that can provide information at a very granular basis, and beyond that is how you calibrate your model. But I would tend to agree with you, Victor. It's about, if you're talking about, let's say, granular, secure, but anything that is statistical is pure based information, naturally. Well, also the chunky stuff is based on information, but then it's also about how much due diligence you put in that. I'm not sure if anyone else want to share the view on that, or we can go to the next question. Okay. The next question, then the last one is, I'm not sure if I understood this correct, but the anonymous attendee is asking, and that's kind of a curveball that maybe Carl, you can answer. What are the risk premiums of NPL purchasing in Brazil as opposed to Europe? Maybe you can share, in just a few words, why someone should be investing in NPLs in Brazil and not elsewhere. I also have a hint on that answer because I just came from that market, but I would like you to go first. Then the second question is, how developed and independent are the debt services, the servicers in Brazil? I would say, most banks have the captive servicing, and the NPL investors, they also manage the books. So there are not many independent servicers. But for now, let's just focus on the first part of the question, which is, what's the risk premium that Brazil offers, risk return in this case, as opposed to invest in NPLs elsewhere?
Yeah, absolutely. So when we look at pricing, etc., in Brazil, we certainly apply a risk premium for the fact that it is a younger market, it is an emerging market, and that premium varies massively, both on how we price in Europe and how we price here in Brazil. Europe itself is a very big continent and has varying degrees of risks that we are prepared to accept in different countries within the continent. It's similar in Brazil. We have varying degrees of risks that we are prepared to accept for NPLs within different regions and different structures here in Brazil. So the answer in short is, look, there is a premium. We would only invest in here if we could obtain premiums. So we do see a premium for investing in Brazil. The caveat on that is there's a number of very successful and relatively large local funds that are operating in this segment as well. So we do compete with people that are solely focused on Brazil or LATAM investments. And so they don't necessarily have the same pricing viewpoint that we do in terms of baselining against other markets. But there is certainly a risk premium here, but it varies greatly. You could be talking anything from 200 basis points to 1,000 basis points, depending on where we're looking and what baseline in Europe you're using. I don't know, Andre, if you've got sort of more specific data that you want to go into on that, but from our point of view, there is a risk premium, it does exist, and then that's kind of one of the reasons that we're here.
Okay, anyone else wish to add anything else to this question? Should we just wrap this up? Okay, I cannot stress how thankful not only myself, but the entire Deloitte team is for each participant here to take your time on your busy schedule to share this view with the audience. I've been receiving already some feedbacks on my WhatsApp here from investors that are connected, saying, I really enjoyed the answers. This is very interesting. I think I speak on behalf of everybody. It was very productive. And whoever is watching this, I would like to get in touch with Guilherme, Victor, Alexandre, and Carl. I believe their LinkedIn is fairly updated. You can DM them directly. Everybody wants to do business here. The challenge, of course, but we are working towards improving every day. So with that said, thank you again. Have a great day, and I hope to see you next time. Thank you.